Welcome back to the Fostering Financial Victories podcast. Erik, your host. I am joined today by Dante Russo and Bri Prosser. So thanks for joining us this morning. We are going to talk through probably one of the most maybe one of the most the topics that people really don't want to talk about very often after they've done the initial action, right? So home insurance, car insurance, property insurance, all that stuff.
Yeah.
So Dante, you've been in the business for 15 years.
That's right.
Owner of SDR Insurance.
Correct.
So Bri actually is a member of our team. So she joined us earlier this year, but she's got some background in this too. And when we were going through all the questions, I think she might know a little bit more about it than she leads on. So that's why she's here.
That's good.
Yeah.
A mediator.
So
Perfect.
Maybe first things first, Dante, how did you find yourself in this business that you have been in now for 15 years?
Actually, it really just fell in my lap. I moved to Greenville, South Carolina in 2006, and my job when I got here, I actually sold Red Bull for a living. You know, the energy drink Red Bull? Yeah.
It gives you wings.
Yeah, it did.
Yeah.
It did, and with that, you know, it was really first job out of college, and just looking for side money. I bartended on the weekends here in Greenville for a year or two. And a girl that I worked with, her roommate was a manager at Liberty Mutual Insurance.
Okay.
And they were looking to hire sales reps. And I gave it a whirl and spent a year and a half at Liberty Mutual. And then him and I kind of went out and we started with two other people, an agency. And that's really, I mean, I never thought about it. I never woke up one day and was like, hey, let's sell insurance. You know,
Started in a bar. How about that?
Really, it really did, honestly.
Okay.
Who'd have thought? But
Yeah.
Here I am today. I mean, 15 years later and still doing it.
Very cool.
Yeah.
So Bri, you've got a little bit of background in this. I know you joined our team earlier this year. Can I give everybody an idea of what your background has been?
Yeah, so I actually have 6 years of insurance experience. Of course, again, one of those kind of stumbled into it. I wrecked my car. My mom worked at State Farm, and I had a friend that State Farm was on her way home from school, and she said, oh, I'll just drop you by there. So I started hanging out in the afternoons, and they gave me a job. And then ended up getting licensed in home and auto insurance and just kind of went from there.
All right, so kind of talking through this, home and auto insurance doesn't sound like it's that big of a strategy point for somebody's planning, but it's a huge deal, right? So kind of talk through some of the parts of that world that you touch on a daily basis, Dante, and we'll start there and just start unpacking, you know, what they should know about it and what they maybe should look at what they may be doing right now.
Yeah, well, I guess we could probably chew one piece of the pie off first. Maybe we can focus on auto and then maybe go into something else because they're completely different. You know, South Carolina being an at-fault state when it comes to car insurance, it's really important that you protect yourself properly. In the South Carolina, you'd be very surprised how quickly you can run up some bills. Give you an example. A client, of course, we won't say names, but had it right here on Woodruff Road, had an accident. Everyone walked away. Everyone drove their cars away. No cars were totaled. I mean, she's already looking at $50,000+ worth of damage and not including injuries. So you can imagine if someone is an amputee or if there's a death involved in an accident, the amount of liability exposure that's going to be on your plate. And again, it comes down to state law. We are an at-fault state. So if you're liable when you caused the accident, you can be fully responsible for not only the property damage that you did, but also the bodily injuries.
So tell me, what does the state require you to have?
So the state minimum in South Carolina is only $25,000 per person. And then if there's multiple people injured in an accident, $50,000 for everybody in a car. And then the property damage is $25,000. So that would be damage that you do to other people's property, whether it's a vehicle, you run off the side of the road, run over someone's fence and whatnot. If you can imagine, that's as low as you go. I mean, if you T-bone a car and you put someone in the hospital, I mean, you can probably burn through $25,000 worth of bodily injury pretty quickly.
I think the ambulance ride is going to cost half of that.
Easy. So, people don't know. And people don't look at it. It's not like everyone wakes up in the morning and says, hey, let's look at my insurance. It's kind of like maybe poor choice of words, but a lot of people call it a necessary evil. Like, I'm paying it because I have to have it. But, a lot of people don't educate themselves on why do I have it and do I have enough?
So when people buy a car, right, kind of let's say you're at the dealership and you're buying the car and you're putting insurance on the car because the state tells you have to do it, most people do what? in your opinion?
Most people just call their current carrier and just make the change, and that's it. I mean, they give them the VIN number and they swap a vehicle, and that's the end of the conversation. There's no more education after that level. A lot of people buy insurance online, which, being local, I've always, whether you go with me or not, it doesn't matter. You always should talk to somebody local, because not only do you get that personal feel where you can walk into their office, but you get the educational level as well. And it's good to talk to someone in person rather than buying something online and a click of a button, you just bought something and you have no clue what you did.
And there's a lot of different terms in the comprehensive versus collision versus
Correct.
Roadside assistance.
Yep.
So it's nice to be able to have someone to walk you through each of those and explain to you, okay, this is when you would use it and this is why you need it.
That's exactly right.
So what are most people riding around South Carolina with?
I see it all. Either there's a lot that are driving with no insurance, which is a huge problem in itself. And, you'd be surprised. There's a lot of people that drive around with state minimum limits. Probably, I see a lot. Dealing with new clients. But you have that conversation and they're just like, wow, I never realized the exposure I had, because, again, you get the bill, you pay it, and you move on. You don't think about insurance every day of your life, But people would be surprised to know that even increasing your limits, to the one up to 5,100 or even 100, 300, it's not that much more expensive. Really not. Maybe a cup of coffee a week. Compared to a month, you got to look at the value outweighs the cost tenfold.
So do you think that people are maybe going for the cheapest route just because they think, one, I'll probably never need it, never
Correct.
use it, and not really understanding what that could do to their overall plan? If, worst case scenario, what you were describing earlier, somebody gets put in the hospital, what happens to the rest of their assets?
That's exactly right.
If they're running around with this minimum. So they're on the table, right?
That's exactly right. Anything's on the table.
Yeah.
A judge or a jury, of course the lawyers would battle it and, litigation and all that. I wouldn't be part of it, nor would any other insurance agent. That's handled by the insurance companies. People have gotten judge and liens placed on their assets, being their house. And, certainly whenever you sell the house, any equity you have in the house, if you have that judgment against you, that's all going towards paying that. It happens. The odds of it happening, I don't know, but most of the time that you see people that say, wow, eye-opening, is either A, when it's too late, when it happened to them, or B, someone close to their family or friends, we're in this serious accident, and all of a sudden it becomes the eye-opening experience. Oh boy, they're exposed. Maybe do I have enough? So the people that are proactively seeking that, or talking to financial advisor like yourself and your team, you guys are a great starting point to initiate that conversation, getting ahead of the curve and being proactive rather than reactive regarding that situation. Because, again, a lot of times that I get the call, people coming to me looking for quotes, something has changed in their life and impacted them that made them think more about insurance.
Yeah, they just didn't wake up that day and say, I'm going to check
right.
my insurance.
That's exactly right.
Right.
So it's either myself will initiate that conversation, financial advisors like
Sure.
your team do that as well, or, something has changed in their life. They've had an event, an unfortunate event that causes them to call.
So the terminologies you brought up just a minute ago, Bri, we talked a lot about this while we were prepping for this show, and some of the unique nuances with South Carolina in something so simple as getting a windshield replaced in a car.
Yeah, so we were discussing comprehensive
Sure.
insurance and how in South Carolina your windshield would be covered under that.
That's correct.
And we had someone on our team who got tangentially in an accident, had something hit her windshield, and she found out that she didn't have that coverage on there. Ooh. And she said, I had to pay $700 for a new windshield versus what comprehensive would cost me on a monthly basis.
She was not happy.
No.
Yeah. Well, a lot of people don't know that as long as you carry the comprehensive coverage on the vehicle, whether it's a zero deductible, $100, $500, or even $1,000 deductible, South Carolina law requires free windshield replacement. Just the windshield, not your sides, the back, just the front, because it's considered a safety hazard.
Sure.
If you can't visibly see, if your windshield is cracked, it becomes a safety. You can't drive. Well, you can drive, but you're a little restricted. So yeah, to your point, as long as you carry the coverage, it's South Carolina law. It doesn't matter your insurance company. Your windshield is replaced for free.
So the underinsured, uninsured, talk through that. Because when people read it,
yep.
they don't know what it means. And
Yep.
some people, I get it. It's pretty confusing.
Well, the easiest way to explain it, so those are three different coverages. So you get your liability, which that's one level of coverage. Then you got your uninsured, and then under. So don't be confused because you read them both and you're like, why do I have double? Well, they're not. One is un and one is under. The easiest way to explain that is un is no insurance, under is not enough. Okay.
And that's other people, right?
That's right. No, that's for you, protecting you against other people's negligence.
That's what I mean. Yeah.
Yes. So if someone hits you and they don't have insurance,
Right.
then you can take the legal action to go after them, which that can take years. Or if they have nothing to give, then you're stuck paying the bills. But in the meantime, what do? You file a claim on your own policy up to your limits to help offset those, those bills. The under, same way. Someone driving around with state minimum limits, let's say $25,000 per person, and they just hit you, and you have $100,000 worth of medical bills. What do you do? At the end of the day, the hospital's coming after you because they treated you. They're not going to be sympathetic towards your cause and say, well, I understand. We'll just wait until everything plays. No, we treated you. Pay us up.
Yeah.
So their insurance company essentially just cut you a check for $25,000. Well, you have this gap now of $75,000. What do? Well, you can lawyer up. You can go after them. It can take the time. Let the legal process play out. But in the meantime, again, hospital's knocking on your door. They say, what do we do? So that's when you would actually file a claim on your own policy, and it would help offset those costs until that stuff is figured out. Okay. So again, one, uninsured is no insurance, under is not enough. So that's the easiest way to explain it.
And for example, if you have a 3-car pileup and there's 3 cars in the accident, well, if their insurance company paid out for the other car, but you still have damage on yours, that underinsured coverage is going to kick in and protect you.
That's correct. Yeah. So once someone's policy level is maxed out, like the at-fault party, then at that point it's kind of someone's getting left out if that's the case. A lot of times too, people file uninsured, no insurance claims, hit and run. So hit and runs, if someone hits you and they'll say, oh, let's pull over to the median, and they just drive off and the police are never able to find who they are, then at that point you would be eligible to file an uninsured motorist coverage claim because they're considered uninsured if no one's there to pay it. So,
got it.
Yep.
So how much insurance should somebody have on the car stuff?
Well,
let's just stay there for now.
So there's insurance professional associations and such that we as insurance agents belong to. Of course, there's a Department of Insurance in Columbia, which is there to protect the consumer. The suggested limits is nothing less than $100,000 per person, $300,000 per accident, which would be 4 times the state minimum limits, right? But there's also higher levels, which, if you want to get into the umbrella of things with the umbrella coverage is just excess liability. You buy it in increments of $1 million, $1 million, $2 million, $3 million, $4 million, $5 million, depending on your assets, right? But most insurance companies require you to carry underlying auto limits of $250,000 per person, $500,000 per accident to qualify for the umbrella. So the way the umbrella would work would be if you exhaust your underlying policy, $250,000 per person, which $250,000, you injured somebody, and typically you see umbrellas in use with significant bodily injury or death, and in that case the umbrella would then kick in. So essentially you would have $1.25 million per person if needed, or 2.25 depending on the umbrella size you buy.
So the umbrella, just to clarify, the umbrella, if it's $1 million,
correct,
it's per person? Or is it total?
Well, it's just total. It's just total liability. Whatever you're held liable for, it's a liability exposure. So it can be used for property damage.
So it's different than your car insurance, and that's per person. This is more.
Correct. This is just overall. Yeah, and the umbrella would go over all assets in your personal name. Okay. Whether you have a boat, motorcycle, home, beach home. Okay. But when you start putting things in business names like a rental property and an LLC, your personal umbrella does not extend to that because that is a different entity.
So for the car insurance side of things, if you are concerned then about the excess liability coverage, you probably need to be in that 250 range. Is that what I'm?
Correct.
Okay.
That's correct. Yeah, for most companies. I mean, these companies we represent, and I know some of the competitors, which we don't represent as an independent agent, they too require at least $250,000 per person, $500,000 per accident to qualify to purchase an umbrella.
Okay. How many people are... just on average, I know you probably don't know the statistics. You might, though. Umbrella coverages across the state, is that a common thing? Is it?
I would say it's more or less common than more common. I would say, it's probably a fraction of people in the state. So to answer your question, I don't know the exact statistics, but I would say it's definitely probably in single digit.
So can you talk through maybe what the holdup would be on somebody not doing that? Is it mainly probably a cost thing, or maybe they just don't know about it?
Well, I think it's a combination of both.
Okay.
I mean, if you look at to me, I'm always a firm believer. I mean, you can get a $1 million umbrella depending on your assets. I mean, with one home, couple vehicles, probably less than $250 a year.
Okay.
So the cost there is marginal, you know what I mean?
Right.
There is a cost associated with increasing your underlying limits if you need to. But I think at the end of the day, to answer your question, a lot of times people, just aren't educated. It goes back to, people just wake up and pay their bill. They've never talked about the insurance and why it's so important. And then B, the people that do have the conversation, it does become a cost thing. Some people look, but be honest with you, most people clean driving records because there's qualification factors. I mean, if you have a bunch of speeding tickets and accidents, insurance companies aren't going to offer you an umbrella because statistically you're higher likely to use that umbrella. That's right. So for most people, I mean, even if you carry state minimum limits and purchase the umbrella, I mean, you're probably looking at an overall cost of less than probably $500 or $600 a year.
Okay.
I mean, it's not a significant increase. It really isn't.
Okay.
I mean,
so how often we can stay on the car stuff for a minute because
sure.
I think the house piece is a whole nother animal.
That's right. Yeah.
So for car rates, why do they change every year?
That's a good question.
If your insurance doesn't change, what's the deal?
So insurance it's a risk assessment. So it's all about profitability for the insurance companies. If they're allowed to take a rate increase, it actually has to be approved by the Department of Insurance in Columbia. Okay. So it's not like that, an insurance company wakes up one morning and says, yeah, we're just going to raise everyone's rate by, 10%. There has to be a reason why they're doing it, and there's a lot that goes behind it, more so than I'll probably understand, and all of you as well. I mean, it's just pretty complex. But the good thing is just know that the Department of Insurance is there to protect the consumer, so insurance companies can't price gouge the consumer. So there's a lot of justification as to why prices are where they are. And it's all about profitability from the prior year. So I can tell you this, last year, for the first time probably in about 10 years, auto insurance in the state overall, now some companies may, but I'm just talking if you take all the insurance companies in the state, has been profitable. And the main reason for that is most people weren't driving to work as much anymore because of the pandemic. So there wasn't as many accidents. So
less claims.
However, on the flip side, home insurance claims have gone through the roof over the past year, and the reason why most people are sitting home and they start noticing things, maybe this is wrong. So now it's a flip side. You're probably going to see home rates increase probably for the next year or two because claims have been astronomical over the last year. And on the flip side, I think auto rates for the first time probably since 2013 or 14 are probably going to remain pretty stable. Now, granted, that's if you're a clean driver, no tickets, no accidents. If you've had your tickets and your accidents, I mean, you can expect your rate increase as, the analytics and their system determines.
Okay.
So.
And if you did have a ticket or an accident, how long is that on your record affecting your insurance?
So that's a good question because that's a double whammy. So let's say you're a clean driver, your whole household, clean driver. A lot of people don't realize they get that first ticket or first accident. All of a sudden their insurance jumped $400 or $500 a year. And then, they try to justify saying, well, I've been a clean driver 20 years and it's what about me now? Like that's how the insurance companies looked at it. They don't look at the past. They do, for future rates. However, it's a double whammy when that happens because most insurance companies have what they call safe driver discount or clean driver discount. So not only do you lose that with most insurance companies, that's a couple $100 a year savings. You lose that discount and then you get surcharged for the ticket or the accident. So in your case, you look like it's a massive jump, like $30 or $40 a month, but in reality, it's because it's a double hit. You lost the discount and you're getting surcharged. Now, with that being said, if you don't have the safe driver discount and someone in your family were to get another ticket, it wouldn't be as an astronomical increase because you don't have that safe driver. That's right.
Yeah.
So most carriers, to go back to your point, there's usually a three-year safe driver discount and a 5-year, which is the bigger, meaning completely clean for 5 years. But speeding tickets and accidents are all rated in 3-year window. Okay. There's a lot of insurance companies now that look to a 3 to 5 year window, and most of those don't use it for rate, but they use it for qualification factors. So you can be clean in the 1 to 3, but maybe have 4 tickets in a 3 to 5 year window, and you may not qualify for that carrier because it's just they look at the whole broad spectrum of a 5-year window for qualification. So
okay, so most obvious question for me to ask now is: you make a claim on a policy.
Correct.
And let's say it's not your fault, right? Because you just kind of explained that if it's your fault, you screwed up and did some stuff, whether it's a ticket or you got in a wreck. But let's say somebody hits you, you make a claim. What can you expect to happen with your policy then? Not your fault.
Well, it depends. I mean, that's a whole different can of worms because, again, if you're not at fault, really the first thing you should do is make sure you take pictures and license plate, their ID card, get their information. But you should always, in my opinion, I mean, if you're not hurt, it's just damage to your vehicle, I always suggest that you call the at-fault insurance companies insurance. Give them the opportunity to make things right for you. Certainly you have the opportunity to call your own insurance company, and they will kind of just hold your hand and basically deal with that insurance company. But a lot of times, that's called subrogation in the insurance world. So what that means is that's a big word. Yeah, it is. So what that means is you can actually let your insurance company handle it for you. They'll actually make sure that you're getting a car. They'll take care of you. But they also charge you your deductible. So it's kind of like an at-fault accident for you in the interim. And then when your insurance company goes and subrogates or recoups that money from the at-fault party, then it gets wiped out on your policy as a not at fault. However, with the timing of things, if your renewal's in like 3 or 4 months and the subrogation process has not gone through, it can impact you at renewal because it's still rated as an at-fault accident on your record. Okay. So that's why for me, I mean, now if you're getting a runaround, I mean, by all means, call your own insurance company. I mean, they're there to help you and make sure you're taken care of, and they will take care of you. But there are times where someone can be deemed at fault in an accident, but then one insurance company says, "Well, I don't know. We see it this way," and that's when you don't want to get in the middle of it. Just call your insurance company, let them handle it, and let the pieces fall where they may.
So let's go into the house stuff.
Okay.
All right. So we can go down the rabbit hole pretty fast, I think. Bri, I'm gonna let you go.
Okay. So yesterday I was explaining kind of as we were talking through this podcast about some of the different types of homeowners insurance because homeowners insurance is a large umbrella with lots underneath it.
Correct.
And just kind of going through some of the different ways that you can cover your home.
Oh yeah. I mean, there's basic. I mean, there's all risk coverage, and there's also named peril coverage, which again, foreign terms for a lot of people, but most insurance companies, I would say, at least all the ones I'm aware of that I've dealt with and even don't sell, they all cover named imperils. So basically that means they're naming the type of loss that would be covered on a policy. So your typical things: fire, theft, vandalism, wind, hail, ice, volcanic eruption. Believe it or not, you may laugh, but Hawaii, Washington,
just in case.
Yes, it could happen.
I mean, there's a lot of they're naming the type of loss that would occur on your policy. So if you have a named peril policy, which almost all the ones that I can think of, doesn't matter your insurance company, they all cover the named perils. These are your common things. If you make a claim outside of what a named peril is, you don't have coverage, and this is where it's not an exclusion; it's just not covered. Whereas you buy the more enhanced policy, which is the all-risk coverage, it flips the verbiage. It'll cover all the named perils, but it basically states, I mean, layman's terms, unless it's specifically excluded, you'll have coverage for it. So you have a lot of gray area there. So there is a more enhanced. I mean, it is pretty complex. Again, things that people don't talk about. Give you a prime example. You're like, well, why would I want to? That might be your next follow-up question. Why would I want a all-risk coverage policy compared to named peril? Well, I'll give you an example. Okay, so all-risk coverage actually happened to a client about 7 years ago. They had a deer, like a wild animal deer, ran through their sliding glass door. Okay, not only did it shatter their door, I guess it freaked out in the living room and caused several $1,000s worth of damage. Okay, on your named peril policy, not going to have coverage for it. Now, one would think this is something my home insurance would cover, right? Not necessarily. Because that is not a named peril. Wild animal running through your home is not listed in your policy to have coverage. However, on the all risk, it's not excluded. So you would have coverage on this policy.
Huh.
Interesting, huh?
Yeah, I mean, maybe that's added to the list now.
Yeah, I mean, we could talk about that one for days because it happens. I mean, your typical exclusions on home insurance, regardless of the coverage or policy you have, flood coverage, never included.
Okay, so let's talk through that. Flood coverage versus wind and all that.
Sure.
So I moved from the coast of South Carolina where flood coverage is mandatory basically. Yep. Coming here, do I need it? Do you see it? Like what go?
So flood coverage is never included on home insurance.
Right.
Always bought as a separate policy. So with that said, the statistic that FEMA gives is 25% of flood claims come from homes not in a flood zone. All right.
Talk how.
Well, I mean, anything.
What do they classify as a flood?
I mean, it can be anything. I mean, typically weather related. I mean, pipe burst in your house is not a flood.
Okay, that was where I was going.
Yeah, a lot of people think, oh, well, pipe burst in my house. Well, typically a pipe bursting in your house is covered as long as you're not negligent and took the axe to it and we're like, hey, my pipe's busted. They're like, yeah, no, you caused that. You know what I mean? Freak accidents, freezing. Again, as long as they can't find you negligent in causing that, that's not considered a flood. You know, flood would be, tidal water, river, lake. Even some mudslides can be classified as flooding depending on what caused it. I mean, they can go back to that. But yeah, so flood coverage, earthquake coverage is also not a coverage. Most policies will cover it, but it's an endorsement.
Okay.
It's not a standard coverage. Okay. And then dry rot, typical exclusion on home insurance. You can't buy dry rot coverage. They just feel, maybe that's the thing that I probably don't agree with the most, but who am I on home insurance? Because dry rot, they just feel like that you've been negligent for so long, letting something go for so long, that we're not covering it because you didn't prevent further damage. But to be honest with you, a lot of times that you see dry rot, like pending claims, is when someone does a bathroom remodel and they lift up their toilet, the subflooring went, or they move their dishwasher or fridge. Sure. I mean, let's be honest, who's moving those things every day? You're not. I mean, so it's just maybe a loophole in the insurance, but again, who am I? I just sell it, so,
Fair enough.
We also talked about learning the differences between all of the different home policies, like an HO6 versus an HO3,
Correct.
HO5.
Yep.
And I think that that's one of the most important pieces in talking to an insurance agent, so you can kind of really understand what it is that you're covering and what the difference is. One may be cheaper, but that's not necessarily the best whenever you're looking to get things covered.
Yeah, so for time's sake here, so we'll just run through them. The HO3 would be your named peril. That's your standard, which we discussed. Yeah. The HO5 would typically be your all risk. I mean, it's just a wording. Your HO4 is a renter's insurance policy. Just if you rent an apartment, just needing your contents covered, you're not worried about the structure. Apartments, you rent a home. And then your HO6, those are typically condos or townhomes where the HOA master policy covers the exterior part of the home, so being the roof or the siding, or if you go like the beach and you're in a high rise and you own the condo, the association of the building covers the whole exterior part. So you're basically insuring the bare walls in. So if your place were to be damaged, fire, tornado, total loss,
hurricane.
Exactly, perfect example. Or even here in the upstate, fire or tornado. I mean, something to complete loss. Basically, the HOA, and this is the HO6, the HOA master policy would technically rebuild the shell of the home, and then you would be responsible for the walls in. So putting your flooring, your fans, fixtures, cabinets, toilets, and then in addition to that, your belongings. So,
okay.
Yeah, so that's not to take too much time on. We could talk all day, I'm sure, but.
So do you, with your business, do you write multiple states, or are you just exclusive to South Carolina?
So right now, it's South Carolina and Pennsylvania.
Pennsylvania.
So Pennsylvania, that's kind of like why Pennsylvania. That's where I'm from. I mean, obviously the center of influence of people, and between my wife is from there as well. So it's just the low-hanging fruit for me. Maybe one day expand something up there, but for now we're just focused on here in South Carolina. There's enough business around South Carolina, trust me, that you can probably open up 100 insurance agencies and you still couldn't write it all. So
how often should people maybe take a look at what their coverage is currently once they've maybe got it set in place based on what you're talking about now?
Yeah, I mean, if you got it set to where, if we have an in-depth conversation, or even with you and your team, I know you guys are big advocates on making sure you're properly protected as far as assets. I mean, once you get it set in place, I mean, really, if not much has changed, I mean, it's good to have a conversation once a year, at least with your agent, to make sure that there hasn't been any life changes. I mean, maybe you inherited a lump sum of money, or that's just one example, and you may want to consider, if you have an umbrella, increasing those. Or,
sure.
But for the most part, if you did your insurance review and you have good coverage, which again, I would say good coverage is anything 100 to 300 or higher on your auto. Certainly, we recommend the 250, 500 with the umbrella. But with that said, it's not something you need to call every month and say, hey, let's talk insurance. Yeah. I mean, unless something major is happening each month, then yes. But encourage. I mean, once a year conversation is fine. I mean, as long as you cross all your T's and dot all your I's from the initial conversation and the evaluation when you sign up, then yeah, for sure.
Okay. All right. So I think biggest takeaway from this, for people listening to it, if you've made it this far, congratulations. Like, you've learned more about insurance than what 90% of the population probably knows.
Yeah.
Take a look at what you have. and just spend a little bit of time, reach out to somebody and kind of get some feedback on what you're currently doing. I think that's the biggest takeaway. You might not need to do anything different, but you may not even realize what the holes are. I think that's probably what you find is people don't even know what they don't know.
Well, I mean, at the end of the day, which, they take this as a takeaway for them as well, is just call your agent. Everybody has an agent, well, unless you call the 1-800 number. But, I mean, most of those people on the 1-800 number are licensed to talk to you. Ask the questions. If you don't have a local agent, I would encourage you to get one because, it's great to talk to someone in person or even over the phone to know where, hey, they're right here with me. They're not sitting in some call center. But nonetheless, it's whatever you want to do, the way you want to do business. I mean, if you go online and do it, that's fine. Just make sure you have a conversation with someone, and it doesn't. I mean, it can be a 5-minute conversation.
Yeah.
So,
Bree, did we miss anything?
I think we're good.
All right. So I checked off all the questions that I wrote down frantically yesterday. Dante, give everybody, the 90-second spiel on how they can reach out to you if they want to talk in more detail. We greatly appreciate you coming on. So.
Yeah,
shameless plug.
You can reach me at 864-900-4642. You can call or text me. Yeah, believe it or not, you can text me. That's fine. The website's www.sdrins.com. So Sam, David, Robert, Igloo, Nancy, Sam.com. Love to chat with you. Do home, auto, property, and casualty for you. Do not do any life or health. So just to be clear, but yeah, your property and casualty. We'd love to chat with you. And even if you have general questions, I mean, I'll talk with you. You don't need to buy a policy from me. If you have general insurance questions, I'll be happy to answer those for you as best as I can. And I'd love to hear from you. And if you have any questions, you guys just feel free to reach out. I appreciate this time. This has been great. So
awesome, man. So you're not off the hook yet. We have 2 questions we want to ask you.
Okay.
That everybody's been asked. That has joined us. You don't know what these are unless maybe you do.
Okay.
Because you probably listened to a few of these. First one is, if you could buy anything in the world, regardless of the cost, what would it be?
If I can buy anything in the world.
Anything in the world.
That's a really tough question. So if I can buy anything in the world, I'm not really a tangible person, and I'm probably going to skate that question because I always say that money doesn't buy you happiness. So if I can buy happiness for my family for the rest of my life, then that's what I would spend on. Yeah.
Okay. Second one. Last 2 things that you spent money on.
Last 2 things that I spent money on. That's fun. Groceries.
Okay.
And I'm trying to think past this weekend. Well, groceries, I mean, that would include, all kind of things. But
yes, it would.
And gas in my car. I mean, those are pretty boring, but those are probably the last 2 that I actually spent money on.
All right.
So I wish I had something
that's okay.
better to say.
Sometimes you never know what you get when you ask that question.
Oh, well, you ask me maybe tomorrow, it could be completely different.
Could be. Didn't buy any insurance today.
No, I didn't.
Okay. All right. So, guys, thanks for joining us. If you've got questions or suggestions on topics that we can cover or you want to hear more about, reach out to us. You can find us at our website at fostervictorwa.com. You can also find us on Instagram at Foster Victor Wealth Advisors. Again, we appreciate it. Share this with a friend or a family member, whoever you think might find it interesting. See you next time. Information contained in this podcast was intended for general use, not to be used as specific advice. For content tailored to your personal situation, please contact one of our wealth coaches.